Let's go through 8 charts in about as close to 8 minutes as possible here. And then at the end, I'll give you a little conclusion about where the market is and what to expect moving forward in the short term. Before I begin, I must remind you this is a financial education presentation. You must do your own due diligence before acting on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and any opinions expressed are mine alone. We do have the S&P 500 down just about 1/3% today. Actually carrying a 9-day win streak into today. So do we give any back today? Do we try to claw back green? I feel like the market's going to want to try to claw itself green almost every day leading into the SpaceX IPO. We did have Google try to front run SpaceX a little bit by issuing common stock. I'll probably highlight that Google story in another video, but there is a race for investor cash going on, and it seems like Google may have just jumped to the front of the line there. But anyway, keep a lookout for that story coming later. I wanted to chart number 1 really quick, the Strait of Hormuz. So this is where that oil bottleneck popped up. We're still seeing traffic on the ground here. This is daily transit and then daily transit trade volume. Both of these values have kind of shrunk down to zero. We really have, this is sort of unprecedented if you look at a 3-year, 5-year. So how does this resolve? Who knows? We'll see. Obviously, the governments of the countries involved are trying to work out a solution, or maybe, I don't know. But we'll see what happens with that. Just want to show that. I also want to hit just really quick when we're thinking about valuations, market-wide valuations. This is that S&P 500 price to sales ratio. Yeah, I know it's not a super valuable indicator, but it does give you perspective just that the stakes are a little high and that investors are paying more for every dollar of revenue than they've ever paid before. So, of course, margins are high, but there's pressure on these companies to deliver here, and frankly, even some level of risk in the event that companies are not able to deliver. Just, again, something to be mindful of and to watch. It's not like we're coming off of all-time low valuations or something like that. Also wanted to quickly hit, this is that S&P 500 advanced decline line. Are a bunch of companies participating? Well, we had a breadth. So you can think of this just as breadth. Breadth being how many companies are participating in the S&P 500, relative to the whole. We did peak in mid-April. And then we sort of bottomed out in mid-May, got a little resurgence, and then kind of gave some back. So breadth isn't deteriorating here, but this is a bit of a narrow rally, and we'll see that in a second. Also want to show this, not a chart, but this is just to give you some perspective. These are the largest companies by market cap globally, right? And I just want to show you how many of these are in that semiconductor data center build out space. You've got 1 in NVIDIA, 2 with Taiwan Semi, 3 Broadcom. So that's 3 of the top 7. Samsung, 4, Micron, 5, SK Hynix, 6, AMD, 7, Oracle, 8, ASML, 9. So 9 of the top 20 companies in the world are a part of this thing. Now, if you think, well, what if 9 of the top 20 companies in the world were energy companies? That might not be healthy. Or what if 9 of the top 20 were banks? That might not be healthy, right? So when you see so many companies from one part of the market being so prominent, right, in this list, it's just something to be mindful of, and we'll see a little more on that in a second. Again, the S&P 500 looks beyond amazing here. You're way above a 200-day moving average, way above a 200-week moving average. You're way above the January highs. So there's nothing to dislike about the S&P 500 unless you're simply wanting to say that something moved too fast or something like that. But the chart itself just looks beyond amazing. SMH, these are your semiconductors. You bottomed out at 360 in, what is that, March 30th. And you pushed your way up to, and of course they're up nicely again today, pushed your way up to about 650 here. And that's about a 2-month window there to get that rally. So if you go back in history, we've not really seen this group rally like this. So that's something else to watch. You're looking at other lows, and nothing ever, you never came off of the lows quite like this. And it really does kind of go back all the way to April of 25. So semiconductors, are they extended here? Is it normal repricing? That's something for market participants to debate amongst themselves. XLK, same kind of thing. This is your other technology, which is now kind of dominated by semiconductors, but your 200-day moving average, not a problem. 200-week moving average is like 100% ago. That could potentially be a problem. I mean, we haven't seen in history where you've been 100% above your 200-week moving average. So it could be an indication that things are too hot, but you do still have groups who aren't participating, and financials are breaking down right now today. We've been watching this group. It's really hard to imagine a bull market continuing if financials aren't going to participate. So what's the conclusion here? Look, my conclusion is just that this is sort of a tightrope environment for investors where the stakes are, it's not obvious that now is a good time to buy or a good time to sell, right? You would never want to sell into strength, but you'd also never want to own SMH if it's 100% above its 200-week moving average, right? So it's almost like a game of chicken among investors. Like, have you ever played that game where, it's two people kind of going at each other, and you're trying to see like who's going to jump out of the way at the last second first. That's sort of the game that investors are playing right now. The investors aren't ready to sell, but the buyers haven't given up. So it's going to be which side falters first. And then of course, when you look at financials, it's not inspiring here, but you can't picture, which is a healthy and in a strong uptrend. And if other companies start participating a little bit more, or if the Strait of Hormuz opens, you can imagine a few more tailwinds coming that could help out. So that's kind of the conclusion there. I don't think, and I think I'd probably join both of those groups. I don't think I'd be totally rushing to the exits here, and I wouldn't be an aggressive buyer here either. So that's where I'm at. Hey, I hope everyone has a wonderful day. Did I get this done in 8 minutes? I hope I did. Of course, look forward to talking to you soon.